Okay, let's go ahead and get started. So, this week we will be covering the accounting cycle from start to finish in preparation for our early midterm, which will happen right before Thanksgiving break. So, before we get started, I would highly suggest that your study guide that I passed out to you be completed with a combination of pencil, pen, and highlighter. There's some spots where you'll want to highlight to make sure that you remember to fill it out on the midterm, places that you'll want to circle with a pen, and then of course the rest of it will be completed with a pencil. So if you need to pause the video, this would be a good time to gather all of your materials. Remember that I have markers on the bookshelf, and you could just use multiple colors if you don't have a pen. So let's go ahead and get started from there. So here's our schedule and what this week will look like. I'm sorry that I can't be there today, but hopefully this video serves as a really good replacement. So today we're going to be covering source documents, journal entries, and the general ledger, so the first 3 steps of the accounting cycle. Tuesday when I return, we will be covering the worksheet, which is a big part of the midterm. Wednesday will be financial statements, so balance sheets and income statements. Thursday will be the adjusting and closing entries and the post-closing trial balance. And each day will be half packet, so half lecture, and then half practice, which will be posted in Classroom. So again, the packet will be completed by hand so that hopefully you have it as a study guide ready to go for our midterm. And then the review will be digital so that you have lots of practice with exactly how the midterm will look. So let's get started with the first step. So this is source documents. This is the one step of the accounting cycle that is not included in the midterm, simply because it's kind of tricky if you don't know the background of the information that you're given. So if you don't exactly know what has happened in the transaction, it's really hard to tell just from a source document exactly what has happened. But I still want to walk you through a few examples just so you know kind of what accountants go through on a daily basis. So if we start with our first source document, we're looking for the amount of money that's going to be journalized, and then what account is going to be debited and what account is going to be credited. So this first example is a receipt, and receipts can be a little tricky because there's lots of different numbers as far as taxes, amount paid, the amount of change you're given back. But in this case, we're just simply looking for the total. So go ahead and circle the total of 8617. And in these examples, we're not actually journalizing, we're just identifying what number would be journalized and what accounts would be affected. So in this particular instance, we would debit miscellaneous expense because this looks like something that doesn't happen very often, and it looks like it's from a shoe store, so maybe it's like uniforms, but we're going to put it as miscellaneous expense. And as you can see from the receipt, they paid in cash. It says it was a sale and how they paid was cash, so credit to cash. Debit to miscellaneous expense and credit to cash. So here's our next source document. This is a receipt, but it's more of a handwritten receipt. And it says that they paid for rent for the paint shop. And this was back in 1904, but it was a source document that I found that was valid. So in this case, we are going to journalize $15 worth. I know it's a really small amount and it's written in 2 different places, but we're going to do the $15. We are going to debit rent expense because it's for the rental of something. And it looks like we just paid cash for this one as well. So we're going to credit cash. So I'll give you just a second to write all of that down, and then we'll move on to the next one. Hopefully I'm not going too fast. If I am, feel free to pause the video. Okay, so our next source document is going to be a check stub. So this was the part of the check that stays behind. This is actually from a previous problem that we had. But I wanted to bring it back because it can be a little tricky with all of the numbers that are being shown here. But really, we're just looking for the amount of the check that we paid for. And it says on here that we paid for repairs. So our debit is going to be repairs expense. And because we paid with a check is exactly the same as cash. So our credit is going to be cash. So again, debit to repairs expense and credit to cash. Okay, we have a couple more source documents left. Our next one is this very interesting receipt that I found online. Source documents are pretty hard to find, so I kind of had to scrounge. But in this case, we're going to just look at the total at the bottom. For the total, we don't need the itemized numbers, and it looks like this was for televisions and audio sets, and so we're just going to throw it into miscellaneous expense because we have not established accounts for televisions or audio sets, so miscellaneous expense, and it looks like this one was paid for in cash as well. Okay. Our next source document is an invoice and bill. So this is the same thing as a receipt, something that you're given after you have bought something. So we are going to use that total amount at the bottom. The itemized numbers don't necessarily matter. We wouldn't journalize those individually. We would just journalize the total. If we had to journalize every little item individually, our journal pages would be very, very long. And in this case, we are going to do repairs expense because it looks like it's for paint. So we're probably painting something to repair it. And so we're going to do repairs expense and cash. We paid cash for this. And if you notice, this receipt is actually for rupees. So this is not from the United States, but accounting is pretty universal across the board. Okay. Next one is a credit voucher. So if we look, this one is a little bit trickier. It says that it's for sales. So this one is a receipt back to you for something that you sold to someone else. So again, we're going to take that total of $50,000 and we're going to take this one as if we are the person who made that sale. So we are going to debit cash. We got the $50,000 in cash, and therefore we're going to credit sales. Okay. And then this is our last one, I believe, and this one is for a rental expense. We are renting uniforms, and it says that in the memo area, we are doing uniform rental, so rental expense, and we're going to pay cash for this because it is a check, and it's for $335. So notice that in that last section, if you are a little bit confused, do not panic. This is not part of your midterm, and this is something that we're really, really going to focus on when we get into our Monopoly unit. So when we play Monopoly, you're not actually going to get money. You're going to be writing checks to each other and receiving source documents and really working through the process of getting source documents. So that is actually not part of this midterm, but it will be part of our next large project. So do not panic if that section is not your forte, because it's not most people's favorite. So now for flipping the page and moving on to the next section, let's just review a little bit about our classifications of accounts. So we're starting with assets, and assets, if you recall, are things that you have. So things that you can hold or things that are given to you. So examples of those, and they're up on the wall, on the accounting wall as well, but just to recap, some examples of assets are cash, petty cash, which we won't be dealing with a lot on the midterm, just a heads up. Also accounts receivable, supplies, prepaid insurance. Okay, so I'll give you just a second to write all of these down. And again, this is on the accounting wall, and that will be there during the midterm, but this is just to reinforce your memory. The more you write it down, the more you remember. So again, this is something that's not in your packet, but it might be good to write down on the side. It's also on the wall. Remember that with assets, in order to increase them or add to them, you have to debit those accounts. So if you received cash, you're going to debit it. If you received supplies, you're going to debit it. Where on the alternative, when you credit them, it reduces it. So if you receive money back from accounts receivable, then you're going to decrease that account and you're going to credit. So I was trying to reiterate a lot last week that there's no such thing as just adding in accounting or subtracting in accounting. It is debiting and crediting. Those are the correct ways to add or subtract. So if assets are what you have, then liabilities are what you owe to other people. So when you owe other people and you're going to pay them later, or maybe you will pay them in a long time from now, those are liabilities. And we've only gone over one account in particular, and that is accounts payable, meaning that you're going to pay them later. So with liabilities, it's going to be the exact opposite of assets because they're on opposite sides of the accounting equation. So therefore, when you debit a liability, it goes down, and when you credit a liability, it goes up. So exactly the opposite of assets. So feel free to jot that down too. You should have lots of extra room. Okay, and then the last classification of accounts that we're going to deal with is owner's equity. So assets are what you have, liabilities are what you owe, what you are worth. And we've gone over quite a few of this type of accounts. So the first one being capital, the next one being drawing, so when people withdraw money out of a business for their personal use. We've talked about sales, of course. We've talked about sales quite a bit. And the counterpart to that is expenses. And that's any type of expense. Doesn't matter what the type of expense is, it's still an owner's equity account. Okay, and owner's equity has the same tendencies that liabilities have. So therefore, if you are decreasing your worth, you are going to debit. And if you are increasing it, you are going to credit. So some accounts that decrease owner's equity are expenses and drawing. Whereas on the flip side, when you are increasing your worth, it is adding to capital and getting additional sales. So we have two accounts on either of those sides. Okay, so yep, expenses and sales. Okay, so now let's practice some of these journal entries. These are really good to have on hand when you are taking your quiz, so you can try to compare and contrast some of these examples to what is given to you on the midterm. So the first example is John Doe made an investment of $1,000 into his company. So he is adding in $1,000 into the company. Therefore, we are going to debit cash and credit capital. Our cash is increasing. We have $1,000 to work with, and our worth is also increasing, but that is a credit. This is the very first journal entry that's pretty much on every single problem, so you need to really ingrain this one into your mind. Next one, we bought supplies with cash for $500, so therefore we are going to debit supplies and credit cash. Our cash is decreasing and our supplies is increasing. Next one, we paid cash for rent, $750, so our cash is going down and rent expense is going up. So we are going to debit rent expense and we are going to credit cash. Next journal entry, which is very common, and so you can expect this one on the midterm too. John Doe withdrew $100 from his own company. So owners have the right to withdraw money from their company anytime that they would like, but it does decrease the worth of the company. So if it's decreasing our worth and decreasing our cash, we are going to debit drawing and we are going to credit cash. And the last one, we paid $300 for advertising. So our advertising expense is going up and our cash is going down. So we are going to debit ad expense and credit cash. Okay, we have some more journal entries on the next page here. So our next is getting into the accounts receivable and the accounts payable, and I have a little bit of a helper at the bottom of that page. So the first one is we bought supplies on account from Target for $600. What I find is that the accounts payable and the accounts receivable is the trickiest part, and so I look at the simpler part in this problem, and that is that we bought supplies. So we increased the amount of supplies that we have, and supplies is an asset. Therefore, our debit is going to be supplies. We're going to debit supplies to increase it. So now we need to figure out what our credit is going to be, accounts payable or accounts receivable. Now in this one, we are going to be paying money later. We're not going to be receiving it. Target's not going to be giving us money because we're the ones who bought supplies from them. So if we are paying them later, that is accounts payable. So therefore, we are going to debit supplies and credit accounts payable. Okay? The next one, we received cash on account from Jim Johnson for $75. So we received cash. That's the easier part of this transaction. When you receive cash, it is an asset, so we are going to debit cash. And then it says we are going to receive cash from Jim Johnson. So Jim Johnson owed us money, and he's going to pay it to us now. So we're going to receive that money. Therefore, debit cash accounts receivable is our credit. Next one, we paid cash on account to Kim Klein for $50. So we paid cash, so cash is going to be credited, and we must have owed her money, so we have to pay it now. Therefore, we're going to debit accounts payable and credit cash. The next one is sold services on account to Joan Jett for $400. So the easier part of this transaction is that we sold services, so we're going to credit sales. And then we just ask ourselves, will we be paying money later or will we be receiving it? And in this case, she's going to pay us later. We're going to be receiving money from her. So therefore, debit accounts receivable and credit sales. And the last one, we received cash on account from Jack Jameson for $80. So we received cash. Cash is increasing, therefore cash is going to be our debit. And our credit is going to be, which one do you think? Accounts payable or accounts receivable? Let's look. On account from Jack Jameson. So he paid us money that he must have owed us prior. So we are going to debit cash and credit accounts receivable. We're receiving the money that he owed us prior. So for accounts receivable and accounts payable, don't be afraid to walk yourself through it by talking through the process. And ask yourself, do I owe them or do they owe me? Will I be receiving money or will I be paying money? If you're going to be receiving money or you are receiving money, then it's accounts receivable. If you are paying money that you owed or you're going to pay it later, then it is accounts payable. Okay, for each of these steps, I kind of have a little checkpoint of how you can figure out if you are correct. And in this case, if your debits equal your credits, you are more than likely correct in your journal entries. But an even better way to check is if your asset totals equal your liability totals plus your owner's equity totals. So if your liabilities plus owner's equity equals your assets, then you are correct. Okay, here is the last step that you're going to be completing today. So complete this in your packet and then you will be completing the review that's posted in Classroom. So for the general ledger, the numbers that you post to the general ledger are posted individually. So each journal entry is going to be posted into the journal ledger individually from the journal. So you're going to take apart that journal and post every single number into the GL. So what you can do in your review and in your midterm is every time that you have posted a number in your journal, you can make it a different color, or you can bold it, or you can shade in that box with like a yellow so that you know that has been accounted for within my general ledger. And I'm happy to help you figure out how to do that tomorrow when I return. Okay, so the hardest part of the GL is not actually posting the numbers, but rather getting the running balance. So the running balance is just simple addition and subtraction. You just need to know if you're supposed to be adding or subtracting. So for assets, if you recall, assets to increase them, you debit them, and to decrease them, you credit. So you can kind of think of these columns as an addition column in the debit and a subtraction column in the credit. So if we have $1,000 debit, our balance is going to be $1,000, and this should remain in the debit column because that's the nature of assets. So we're going to have $1,000 over here. And then we have another transaction for $300. Now, because that is a debit, we are going to add that number in to make it $1,300. Now, our next transaction, we have a credit for $900. So that is a subtraction because it's a credit. We're going to subtract $900 from $1,300, but we still have enough debits to make it stay in the debit column. So it's going to be $400 as a debit balance. So you're kind of zigzagging your way through, adding or subtracting whatever transaction happened. Okay, whereas for liabilities have a normal balance of a credit, so it should stay in the credit balance for liabilities. There's really no reason why it should ever go into the debit. So our first transaction is $5,000 credit, so it's going to go into the credit balance column for also $5,000. Our next transaction was a debit, and so we are going to subtract it because it's a liability, so our credit balance is now going to be $2,500. And then lastly, we have another credit. Credits add to liabilities, so we're going to end with a balance of $2,600. Okay, so for owner's equity, it should have a credit balance for capital. If it's sales, it will also have a credit balance. However, if it is drawing, it'll have a debit balance, and if it is expenses, it will have a debit balance, because if you recall what we just talked about in the classifications of accounts, those are the natures of those accounts. So if we have a credit for $1,500, that credit is going to carry over to the balance for $1,500. If we have another credit, it's going to add to it to make our balance $2,000. And then if we have a debit, it's going to subtract it and make it $1,900 total. Okay, so for the general ledger, you know that you are correct if, well, of course, if your debits equal your credits, which will be the same checkpoint for a lot of these. And then also if the accounting equation stays true. So if your assets equal your liability plus owner's equity. Remember that on your spreadsheet you can input formulas to check your debits and credits, but you can also input formulas for your accounting equation, and I'd be happy to show you how to do that tomorrow as well. So those are the first steps of the accounting cycle. Tomorrow we will be covering just the worksheet, and I'll be helping if you had any questions from today's lesson. And then we will keep going through the accounting cycle for the rest of the week. This video is also posted on my YouTube channel, so if you search my name, Snowy Schroeder, you can find this video, especially if you are wanting to review before the midterm next week. So I'm going to try to video every step of the accounting equation so that you can look at it later if you're trying to study this weekend to ace this midterm. Reminder that this midterm is open note, open book. You just can't use any partners. So you'll be able to utilize any resource that you have to pass this midterm. All right, see you tomorrow.